Hi there, future investors, and welcome to the channel. I have some great news for everyone. I just started a new collaboration with my fellow investing buddy Luke Becker from LBecker Finance. Luke is on a mission to helping the average person to make money in the stock market. You can follow him on X and also subscribe to his newsletter, which is great, by the way. We're going to work together to provide a daily executive summary on the markets to as many people as possible. Thanks, Luke, for the availability. Today we'll be covering the 22nd of August market updates. So yesterday the S&P ended the day down 0.9%. However, it's still up 0.5% from last week. Today's notable gainers were Peloton up 35%, Zoom Video up 13%, and Gap up 4%. As to the notable losers, we have Advanced Auto Parts down 17%, Snowflake down 15%, and Moderna down 6%. Peloton stock jumped over 30% after the company reported its first revenue increase in more than 2 years. Sales rose to $643.6 million, beating expectations, and the company reduced its losses. Despite the positive news, total members and paid subscribers slightly declined. Peloton also cut costs by $15 million as part of a restructuring plan and absolutely slashed through their net loss, reducing it by 87%. Analysts expected their revenue to decline, and it actually rose, shooting the stock up over 30%. Can they reach profitability soon? Zoom's earnings and revenue topped estimates as enterprise sales growth beat views. Plus, revenue guidance came in above expectations as Wall Street analysts look for growth to re-accelerate. GPS's shares have rallied around 11.5% in the past month, surpassing the industry peers and the broader S&P index's rise of 2.6% and 0.4% respectively. The company also outperformed the broader Zacks retail wholesale sector's growth of 1% in the same period. Additionally, GPS is trading above its 50- and 200-day moving averages, indicating healthy upward momentum and price strength. This reflects positive market perception and confidence in the company's financial health and prospects. Snowflake is taking a hit after its quarterly earnings. But you wouldn't guess it from the results. They reported product revenue of $829.3 million, reflecting a 30% year-over-year growth. This performance was driven by steady demand across key verticals, particularly in financial services and technology sectors. The company also got 2 significant 9-figure deals in the quarter. Net revenue retention rate was reported at 127% as of July 31, 2024, indicating that existing customers are not only renewing their contracts but also increasingly consuming more of Snowflake's services. Future guidance for product revenue in the third quarter of FY 2025 is between $850 million to $855 million, suggesting continued momentum in growth. The full-year product revenue estimate is increased to approximately $3.356 billion, translating to a growth rate of 26% year-over-year. Regarding profitability, the company remains focused on operational efficiency, with expectations of a 3% operating margin for Q3 FY 2025. Despite significant investments, particularly in AI and product development, Snowflake aims to maintain a non-GAAP product margin of approximately 75%. During the call, Ramaswamy noted the importance of Snowflake's position within the competitive landscape, asserting that they are recognized as a leader for their analytics and data sharing capabilities. The company is actively addressing competitive pressures while emphasizing their strengths in product offerings, which are being tailored to meet evolving customer needs. After appointing a new CEO, Starbucks unleashes another secret weapon, the pumpkin spice. Starbucks introduced its popular pumpkin spice products earlier than ever, hoping to boost sales as it faces declining foot traffic. The early launch follows a recent $20 billion market value surge after hiring Chipotle's Brian Niccol as CEO. The man is even allowed to work from home. Yes, he can. Despite this, Starbucks' latest quarterly results showed a 6% drop in North American transactions. With the new CEO starting in September, the early pumpkin spice rollout aims to revive a tough financial year. Now moving on to other economic news. Jobless claims rise slightly, indicating cooling labor market. Initial jobless claims increased to 232,000 last week, up from 228,000, missing expectations. This small rise shows the job market is slowing down a bit. A cooling labor market makes it more likely the Fed will cut interest rates to support the economy. Jerome Powell will speak in Jackson Hole today, which could provide more insights into the Fed's plans. The expectation is that we will see a rate cut of at least 25 basis points in September. Tom Lee, our favorite bull, went on CNBC to say that for the Russell 2000 to rise 40%, we only need it to go from its current 10 times PE to a 14 times PE, so small-cap stocks are ready for quite a ride up, as they will benefit the most from a rate cut dynamic from September on. Some of my favorites are FUBO TV, Hims and Hers, The Honest Company, SoFi, and Cheesecake Factory. Now it's up to Jay Powell. All signs point out to a rate cut coming in September, but it's not clear whether it's a 0.25% or a 0.5% cut. Rate cuts appear to already be priced in, as we have seen the market increase in the past couple weeks. So rather than having a spike up, if we only get 0.25 and a more conservative approach from Powell, we may have a sell-off. Let's see how that goes. That's it for today. Stay tuned for more, and I'll see you back in a great future.